Have you ever stopped to think about that piece of paper or that number on your screen you use to buy coffee? What is it really, and how did we get here? Today we're going on an incredible journey through time to uncover the evolution of money, from ancient bartering to the digital currencies of tomorrow. Let's rewind thousands of years. Before coins, before paper, there was barter. Imagine you're a farmer with a surplus of wheat, but you desperately need a new pair of shoes. You'd have to find a shoemaker who not only has the shoes you want, but also happens to need wheat. This system, called the double coincidence of wants, was incredibly inefficient. It worked, but it was clunky. You'd have to haggle over how many bushels of wheat a pair of shoes was worth. And what if your wheat spoiled before you could trade it? There had to be a better way. So humanity started looking for something better, something everyone agreed had value. This led to the age of commodity money. All sorts of things were used: salt, seashells, cattle, and even giant stone discs on the island of Yap. These items were more durable and easier to trade than, say, a cart full of vegetables. In ancient Rome, soldiers were sometimes paid in salt, which is where we get the word salary. In China, cowrie shells were used as currency for centuries. These commodities had intrinsic value, could use the salt. You could wear the shells, but they were still difficult to transport and divide. Carrying a cow's worth of value was a bit of a hassle, to say the least. The real game changer came with the discovery of precious metals. Gold and silver were perfect. They were rare, durable, easily divisible, and portable. Around 600 BC in Lydia, an ancient kingdom in modern-day Turkey, the world's first standardized coins were minted. These were small, stamped pieces of electrum, a natural alloy of gold and silver. Suddenly, trade became much simpler. Each coin had a set value, so there was no more haggling over how many chickens a cow was worth. This innovation spread like wildfire across Greece, Persia, and the Roman Empire, fueling a massive expansion of trade and commerce. For the first time, wealth could be easily stored, transported, and exchanged across vast distances. But carrying around bags of heavy coins wasn't always practical, especially for large transactions. This problem led to the next major leap: paper money. The concept first emerged in China during the Tang dynasty around the 7th century. Merchants, tired of lugging strings of heavy copper coins, would deposit their metal money with a trusted party and receive a paper note of credit in return. These notes were basically IOUs. It was the Song dynasty, however, that first issued official government-backed paper money, known as jawazi, around the 11th century. When Marco Polo traveled to China, he was astounded by this idea of using mere paper as money. He brought the concept back to Europe, but it took a few more centuries for it to catch on. European banks began issuing banknotes in the 17th century, which were promises to pay the bearer a certain amount of gold or silver on demand. This was the birth of representative money. The paper itself wasn't valuable, but it represented a claim on something that was. For a long time, currencies were tied to the gold standard. This meant a country's paper money could be exchanged for a fixed amount of gold. It provided stability, but also limited the money supply. A country couldn't just print more money, it had to have the gold to back it up. This system dominated international finance for decades, but faced major challenges during times of economic crisis, like the Great Depression and the World Wars. By the 1970s, most of the world, led by the United States, had abandoned the gold standard. This ushered in the era of fiat money, which is the system most of us use today. The word fiat comes from Latin, meaning "let it be done." Fiat money has value simply because the government declares it to be legal tender, and we all collectively agree to accept it as a medium of exchange. Your dollar bill or euro note isn't backed by gold. It's backed by trust in the government and the economy that issues it. This gives central banks more flexibility to manage the economy. But it also carries the risk of inflation if too much money is printed. Now we're standing on the precipice of another revolution. The digital age has transformed money yet again. First came credit and debit cards in the mid-20th century, which turned money into electronic signals. Then came online banking and mobile payment apps, which put a virtual bank in our pockets. We can now send money across the globe in an instant with just a few taps on our phones. Money is becoming increasingly abstract, a series of ones and zeros flying through cyberspace. And that brings us to the latest and perhaps most disruptive innovation, cryptocurrency. Born in 2009 with Bitcoin, cryptocurrencies are decentralized digital currencies secured by cryptography. Unlike traditional money, they aren't controlled by any central bank or government. They operate on a technology called blockchain, a distributed public ledger that records all transactions. This offers the potential for a truly global, borderless financial system with lower transaction fees and greater transparency. Of course, cryptocurrencies like Bitcoin and Ethereum are still highly volatile and face regulatory hurdles, but they are challenging our very definition of what money is and how it should work. From a farmer trading wheat for shoes, to a Lydian merchant jingling the first coins, to a modern-day trader buying Bitcoin, the story of money is the story of human innovation. It's a tale of our endless search for better, more efficient ways to cooperate and trade with one another. Each step in this evolution has unlocked new possibilities, built empires, and fundamentally shaped our world. So, the next time you tap your card or scan a QR code, take a moment to appreciate the incredible journey that brought us here. What does the future of money hold? Will it be central bank digital currencies, decentralized crypto, or something we haven't even imagined yet? Only time will tell, but one thing is certain: the evolution is far from over. Thanks so much for joining me on this journey through the history of money. If you found this fascinating, don't forget to hit that like button, subscribe, and ring the bell so you don't miss our next exploration. What do you think the next form of money will be? Let me know in the comments below. See you next time.